afternoon. Hope everyone is having a wonderful day. I'm going to be talking about construction loans. I made another video a couple months ago about construction loans. If you have not seen that video, I will leave a link in the description below. Be sure to check it out if you're thinking about building a house. I think I have some great information in that video. In this video, I'm going to be answering a question that I got in the comment section of that original construction loan video. First, let me give you my disclaimer. Please keep in mind that I am not a financial lender. I'm not a financial expert. We bought some land, we built a house, we got a construction loan. This information, I'm trying to just help people based on our experience. The question comes from Nancy Reyna. Hopefully I'm saying your name right. Thank you for watching and thank you for your question. How much does our land have to be paid off to have equity? My response to her was, every dollar that you pay towards the principal balance on the loan will give you more equity. Your equity slowly goes up as you pay off your loan or when the property value increases. Most people may already know about equity, but I'm going to try to simplify it in my own words. Maybe that will help some people. Let's say you buy a property for $50,000. So the property is worth $50,000 and you have a loan for $50,000. You have $0 in equity. Now let's say you buy a property for $50,000, but you put $5,000 down. So the property is worth $50,000. You put $5,000 down. Now you owe $45,000. You have $5,000 in equity. Here's another example. You buy a property for $50,000 and let's just say you don't put anything down. Over the next couple of years, you're making your monthly payments on the property, and let's say over a few years you've paid $10,000 on that property. So now the property is still worth $50,000, but you've paid the loan down by $10,000, so now you owe $40,000. That means you have $10,000 in equity. So the equity in your property, it really goes up instantly, really with your first payment. The first down payment or the very first monthly payment that you make on your property, your equity is going to start growing up. Every little bit of principal that you pay down on the loan, you're gaining equity. Another question related to this, how much equity do you need if you're trying to get a construction loan? That's a really complicated answer. There's a lot of variables involved. How good is your credit? How much cash do you have? Of course, how much equity in the land do you have? Property values around you. There's a lot of things that kind of balance out. It's not just about the equity. There's a lot of things that go into the equation, and if you sit down with a lender, I'm sure they could help you figure out what you need. I also added another reply. If you're asking about how much equity do you need to get a construction loan, that depends on a few different things. How good is your credit? How good is the housing market? Are there similar homes in the area near where you want to build, or are you overbuilding for the area? Maybe one of the most important things is, do you have good credit? As far as I know, anything above a 750 is pretty good credit. If you have good credit, then you're going to need less equity or less cash to put down, and you can qualify for a better financing rate. You can get better terms, lower interest rate. How good is the housing market at the time that you're trying to build your house? When we built our house a year and a half ago, the housing market was very good. When you apply for the construction loan, the lender is going to send out an appraiser. They're going to have your house plans and they're going to look at your property. They're going to put them together and they're going to appraise the value and say, this house plan, this completed house on this land is going to be worth this amount of money when it's complete. And then they're going to compare that, just like any other real estate sale. They're going to compare that new house on your land to other properties in the area. So in a good housing market, right now it's 2020, the last couple of years, the housing market has been very good. All the properties around you are going to be appraised at a pretty good or high price. That's going to help you get all the construction money you need, and that's going to help you need less equity or less cash down. Now, if you're trying to build a house in a bad housing market, like back in 2008 to maybe 2010 or 11, there were a lot of foreclosures. Housing prices dropped dramatically. And that's a problem if you're trying to get a construction loan, even if you have good credit, because they're going to take your land and your house plan, and when they appraise that together and compare it to other homes in your area, all those homes are depressed. The values are very low because you're in a bad housing market. So that means they're not going to give you as much money for your construction loan. In that case, you're going to need a lot of cash or a lot of equity in the property to offset the cash amount. Another thing that can affect how much equity do you need, and really how much cash do you need, are there similar homes in the area that you're going to build in, or are you overbuilding for the area? If you're building a pretty simple house, 3-bed, 2-bath, that should be pretty decent to build in any kind of area. I would think in pretty much any parts of the country you're going to find some 3-bed, 2-bath houses to compare your new home to. But if you're trying to build a mansion, a huge house on a piece of land, and there's not any other really big houses around there, that may be a problem. You're kind of overbuilding for the area. When the appraiser goes out and compares your house plan and the land, they put it together, they compare it to other properties around there, but there's no other mansions in the area. They have to go further and further out. And I'm not an appraisal expert, but I think that is not as good as there being similar properties pretty close by. Another thing might be if you own land, and let's just say certain parts of states have a lot of mobile homes all around the area, and now you're trying to build a house in that area. That may be a problem also because you have lots of mobile homes in the area. Now you're trying to build a house. It may be a little more difficult to appraise your house because of all the mobile homes. You may want to try to build your house in an area with a lot of other houses to compare it to. Because of all the mobile homes, and they generally have a lesser value than homes, that may cause your appraisal to come in low, and therefore you're going to need more equity or more cash to offset that low appraisal. I've got another video on construction loans coming up really soon. As soon as it's done, I'm going to link it in the description below. It's another comment that I got, and I think I did a pretty good job of explaining it. I actually explained a few things that I think I left out of my original video. If you have any questions, please leave them in the comments below. Thank you for watching.